Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the precious metals markets. And without further ado, with this volatile week, we're going to jump right into some technical analysis with you, Miles. Get us started.
So I got to open this week and just say I've got to eat crow a little bit because, for the last 6-8 weeks, all I've said is gold's coming down. Gold's coming down, gold's going farther down, we got to hit some resistance levels, something has to move down, don't worry, I know it's down, it's going down more. And then last week, I gave up. I gave up.
I'm a witness.
So apologies to all of you out there because as you're well aware, we record on Wednesdays, show came out on Thursday, and by Thursday morning when we're doing our final edits, gold's down $30. So the good news is we've hit our first target. We've hit our first entry point. We came right in within a couple dollars of that 1449 number, that first 382 fib, first support level that we were hoping for, and we've had a little bit of a bounce, and that's not unreasonable. So in the short term, I would argue that we should see gold continue up, but the reality is the old floor is now the ceiling. So I'd be looking for gold to test that 1480 number and hopefully turn further down. I'd still like to see gold come back down to around the 1415-ish area. That's a 50% recovery. That's an exact 2 steps forward, 1 step backwards from the big move we had this summer. You have to pull the drawstring back before you let go of the arrow. And I know a lot of people, including me, who've been consistent gold buyers for years, we are looking for those opportunities to squeeze out an extra 20 or 30 bucks. I mean, ultimately, it doesn't matter. If you don't have a gold position now, what are you waiting for? At $5,000 gold or whatever magical number it goes to, you're not going to remember 20 bucks here and there. But if you have been a consistent gold buyer for years and you're at the point where you're just really trying to strategically tailor your portfolio through working with the advisors at ICA, for instance, these are the types of things that we're talking to our clients about right now. When do we step into this market to add to positions?
Yeah, you have to remember, too, we're actually $100 from peak to trough in terms of that September high that we set. And so this is actually better than just $20 or $30 opportunity. When you're talking about 5-6%, now we're talking real money and it's saving you all expenses. Last week, Miles, you had convinced me in the previous weeks technically. Maybe you felt like you quit a week early. We did say on the show, though, subjectively, it still felt like there was weakness in the market. I personally felt like, no, I think we're going to come down. Plus, we're getting into the seasonal bias. All right, so Robert touched on this slightly last week, how we come down and then we tend to rally in the final week or two of December or that first week of the year. To me, I really would think that it was going to wait until after the first of the year. But we still are in a seasonal weakness period of time here where take this opportunity to step into the market in November, December. Go back and look at the analysis from previous years, and that subjective seasonal bias is what influenced me to just say, yeah, I'm not buying into this bounce yet.
So speaking of bounce, you look at these short-term gold charts. On the 15-minute chart, you've had these 4 nice drops in the gold price, just very consistent, right on a line, while you've had RSI climbing. So there's your divergence right there, and I think that brings argument that we are going to have a bit of a rebound here for the next week or two. But ultimately, you can't scream next leg of bull market until we're back up and testing and surpassing the old highs in the mid 1500s. So like you said, with the seasonal pricing we have in the winter, I'd love to see gold inch back down a little bit, and then we have that big end of year, beginning of next year pop like we've had the last couple years.
So I'm going to put you on the spot, inching down a little bit. What's the key support at lower levels? I mean, we had that 1385 figure that was so hard to break through.
The 618 down at 1385, that'd be amazing. It's certainly reasonable that we at least get down to the 50% line because the other metals have. And I think that's what's key here too. Since the beginning of the summer, gold has led this charge. Gold moved up first. It moved the most to begin with.
Absolutely.
And it's corrected the least. So it is leading the bull market charge in this next major market cycle. However, silver and platinum have hit their 618s. Silver and platinum have both made dramatic price drops here over the last month. Gold hasn't done anything. So the fact that we're seeing any kind of movement here, I know $100 sounds like a lot, but it's comparative. You know,
Right.
$100 on a $200 account is one thing. $100 on a $1,500 ounce of gold is a completely different thing. So I know dollar-wise it may sound larger than it is, but percentage-wise, I mean, like you said, we're down $100 while we were up 300. So
Right.
that's a third.
Still
That's
a
nothing
great
of a correction.
Yeah, 2019's been very solid, and this, if you're not hearing Miles, this is an opportunity to buy on the way down. I mean, we had a ton of activity in the vaulted.com accounts, hundreds of thousands of dollars and a bunch of ounces acquired in the last week, just because of people in the awareness, in the know, realize that it's actually a great opportunity to be adding to your ounces here. That's the takeaway. And with silver lagging, you know, and really taking the bigger drop, the white metals again, you're seeing those ratios climb. And so again, I don't focus on spot price. I focus on the relative values and the ratios with my client accounts. And so we've been picking up a lot of silver and platinum as well.
Right. And I think the opportunities in silver have a little bit more to go as well if you're strategically stepping in as the price is coming down. So moving over to silver, like I said, you know, it's taken the bigger fall. We've got a little geometry in here, and I'd like silver to get to a declining support level, which I think over the next couple weeks is going to line up perfectly timing-wise with the 618. So I'm looking $16.35, $16.35 an ounce on the silver spot price as my turnaround point. Now, over the next month, silver coming down to the 618, maybe that brings gold down to the 50% line. And by the end of the year, again, if we're looking at the seasonal timing, that's when we see our turnaround, end of the D-wave market cycle, and we start that next leg up. And finally, checking in with the last couple metals, you know, something very interesting has happened the last couple weeks. Platinum and palladium did the same thing. They both came down, and that's something we haven't seen in a while.
Actually, palladium even more so than platinum,
Yeah,
right?
palladium down about 8.5% off that high since the beginning of the month. Platinum obviously down about $100, and again, leading the charge on the way down. So the more volatile metals are moving the most, and that's why we like them. We're looking at getting our clients into reasonable percentages of their positions into these more volatile metals, because you translate this price volatility over to the ratio charts, gold versus silver, gold versus platinum, platinum versus palladium, and the low-end metal that you want to get into on that ratio, that volatility is what ends up netting you more ounces down the road.
So that's sort of the technical recap. I'm going to just touch base briefly here on some of the fundamentals. You know, when we talk about fundamentals, we talk about other markets, we talk about policies, we talk about decisions, and that can be monetary policy, economic policy, whatever. But sometimes, too, it's geopolitical tensions, it's political tensions, and we have a lot of that domestically here with the impeachment hearings that are now going public. We have a little bit of a bounce in gold today. I don't think that it's directly correlated, but looking back historically, one of the things that can reverse this trend, right, and it can buck the technical analysis and move the markets back up, and that is political uncertainty. So if this begins to unravel in such a way where it looks as if the presidency is at stake, legitimately at stake, then you can pretty much expect gold to rally. The other thing that we often see historically when there's political survivability at stake is conflict. All of a sudden, out of nowhere, will a conflict materialize? So conflict, too, drives the price of gold higher. So keep your eye on those two things, the impeachment, conflict, and don't be surprised if we don't see the metals reverse merely in response to something of that nature. The other impact that it could have is a rally in the equities markets pausing and turning down, right? So you're looking at all-time highs being constantly touched or exceeded here.
Exceeded.
And yeah, don't expect that to continue when you have legitimate political uncertainty. You know, if the, again, presidency's at stake, you'll see the equities markets come down pretty sharply.
Yeah, I mean, the Dow is just walking right on top of that long-term rising trend line. I mean, we exceeded that trend line, like you mentioned, and now we're just kind of rolling right against it. No real movement up or down. I will say that the transports still came about 3.5% below their all-time highs. and have turned down. So the transports continue to lead the charge, and the transports are saying lower markets.
So you're saying that's a non-confirmation, right?
Correct.
So Miles, we can't leave the show today without you going into the dollar a little bit before we wrap up.
Sure. We've had a good bounce in the dollar in spite of the, 220 billion last month? How much was it?
Yeah.
It was a lot of
Literally
billions.
over 200 billion added to the Federal Reserve balance sheet.
211 billion in
That's
a month.
Quantitative easing on steroids was the quote today.
So the dollar bouncing up. Now, from a again, stick with logic until logic gets thrown out the window. So you stick with the technicals until the underlying fundamentals overpower the short-term technicals.
Amen.
And the short-term technicals are still in power. That's just the reality of it. And the dollar came into its long-term rising trend line. So not surprising to see a bounce there, a little double bottom and a bounce up. We're back up to about 98.5, which is right at its short-term 618 fib, kind of the October, November, fall, and then a bounce back up. But it is compressing up against that. So I actually would expect to see the dollar go higher. Big surprise. I've been saying 100 on the dollar index for like ever.
You can speak for Robert that way
right,
too.
and I think I can speak for Robert. I think we're in agreement. The dollar is pushing higher. I'm calling for 100, and I think we're seeing that move. I wouldn't expect to be shorting the dollar anytime here immediately. But again, every time we get closer and closer to that, my eyes get bigger. So as always, if you like what you heard, hit the subscribe button, ring the bell, head on over to our website, McIlvaney.com. You can find us on Twitter at ICA Gold or Facebook, McIlvaney Financial.
As always, too, if you'd like to speak with an advisor about your personal portfolio, you can call us at 800-525-9556.
Thanks for listening. Have a great week.